Hi, and today is Monday, July the 3rd, and this is what's happening in the condo market this week. Thanks for checking out this video. Happy Canada Day to everyone out there. I hope you had a great weekend celebrating Canada Day. And let's jump right in, shall we? Had a busy week this week in the condo real estate market in Toronto and Canada. So the big news that I want to start off with is interest rates. So there's a lot of increasing chatter going around, and it's looking more and more likely that interest rates will be increasing. The Bank of Canada will be increasing their the central bank will be increasing their interest rates for the first time in about 7 years. Since 2010, we could be looking at an increase in interest rates. And so naturally, this is such a rare event. It hasn't happened in so long. Many people are talking about this and how this might affect the market. There's an article here from CTV News. Who will win and who will lose with the central bank if they raise their rates? So it should be said, we don't know for sure if they're going to do it, but if they are, it's going to be this week. The markets are pricing in about a 60% chance of an interest rate increase. So it's looking fairly likely that it's going to happen. On the other side of the border, the Fed there has been raising rates a little bit lately. So the big thing is that everybody out there is sort of freaking out, saying that, if interest rates go up, this is finally going to be the thing that kills the Toronto real estate market, or the market's going to crash because interest rates goes up. This is complete nonsense. Again, I talked about this on the podcast last week about interest rates in more depth. But basically, if interest rates go up, it's going to be small and it's going to be slowly over time. Small increments and slowly over time. They're not going to jack up rates 1% overnight or anything like that. We're talking about a 0.25% increase, and if they do another one, it's not going to be next week, next month. It's going to be slowly over time that these rates go up. The market will adjust to these small changes. If you do the math on a 0.25% increase for the typical mortgage borrower, if you're in say a variable rate, which again, most people are not in variable rates. Most people are not going to be affected by this at all. But if you are in a variable rate, your mortgage increase on a 0.25%, the average for Canadian is about $24 a month. It's about $12 for every $100,000 you have borrowed. $12 a month. Does that sound like something that's going to bring the real estate market to its knees? I don't think so, not even close. But it is looking like it's going to happen. And if it does happen, again, this is good news for the Toronto and Canadian economy. It means we're doing well. It means that the economy is picking up speed. It means more people are getting more jobs. It means people will be earning more money, more spending power. It's all good news for the real estate market. The next article here is on Rail Deck Park. So Rail Deck Park, if you haven't heard, is a major new park proposed in Toronto over top of the rail line. So building a platform over top of the rail lands, just west of the CN Tower, the Rogers Centre, and building a large park on that. It's between Front Street and City Place. So obviously a lot of people are excited about this proposal. I think it would be fantastic for the city. This article is an editorial from the Star last week. It's comparing the city's proposal, which is to have one giant park, with a developer consortium's proposal. They've come in and they've said a group of developers are proposing to build several towers on top of the rail lines, plus a smaller version of the park. So all park, or some park and some towers. And the article is basically coming out in favor of the all-park version of this Rail Deck Park. Myself, personally, I think this is exactly what I sort of said from the beginning, was if they could combine some kind of real estate development, sell off some of that new real estate that they're creating out of thin air to developers to build on, they could use that money to fund the construction of the park side. Because obviously it's a very expensive. It's going to be around $1 billion, they say, to build this park if they just build it straight out. But if they have towers in there where they can sell off, a portion of that newly created real estate to developers to build on, then you could have the best of both worlds. So you can have a great new public park space. You can have new real estate land in downtown Toronto. You can have new residences, new offices, new commercial shops, restaurants, retail space, stuff that the city needs anyways. But you also get a park. This article is against that notion, but I actually think it's a fantastic way to do it. I think it's sort of the best of both worlds. You can still get a great new park space out of it. Sure, it's not going to be as spectacular and as useful to the public domain as just if it was all park, but it's a better solution, in my opinion, to go with something like that. So it'll be interesting to see and to follow how this develops here. Next article is from the Financial Post, why the incredible shrinking condo is about to become even more popular. So they're talking about how the size of condos has shrunk over time. They're talking about how another consequence of rent controls is that developers are going to build less larger units because, builders of rental housing are going to build less larger units and more smaller units because they believe there's going to be lower turnover in the higher turnover in the smaller units. Therefore, they can raise rents more often when those units turn over as opposed to larger units. It's an interesting theoretical debate to sort of get into. One of the points it kind of brings up in the article, which I think perhaps has some merit, is this idea of there might be a split if rent control does come in as proposed. There might be a split in the market where the very large units will be very popular or the very small units will be popular, and the stuff in between might get squeezed out a bit or might not be as popular. Obviously, the big stuff is as we've been saying for many months, is very important to the market right now because people cannot afford low-rise houses. So you're looking at a growing demand for people to get into larger units. The small stuff, as I've been saying for 10 years here, is always going to be popular. You're always going to do well with the smallest product in the market. It's always going to be the most affordable. Therefore, you're always going to have a strong demand on the small side of things, studios, small one bedrooms, and so on. But the larger product, particularly the 800 to 1,000 square foot range right now is extremely in short supply. And so, as I've been advising many of my investors the past 6 to 8 months, is you want to have some of that product in your portfolio now as well, too. So interesting debate to be looking at here. The next article is from the Globe and Mail, and it is an interview with Warren Buffett. So if you haven't heard, Warren Buffett's been in the news a lot lately because his investment company, Berkshire Hathaway, has purchased a large stake in Home Capital. Home Capital is the mortgage and financial company here in Canada that's been under fire lately, and their stock price has absolutely tanked. They're sort of known as a non-prime, a B lender, a non-bank lender. So they have a lot of mortgages out there for people who can't afford people who can't qualify with the traditional banks. Home Capital is one of the major lenders out there in Canada who's been funding a lot of these mortgages, and their stock price has absolutely tanked, primarily due to the fact that they failed to disclose some information about a very small but unfortunate group of apparently mortgage brokers that were doing some fraudulent activities and fraudulent applications for mortgages. So they failed to disclose that. The word got out. Public perception of them absolutely crashed, and so people were pulling out their deposits, and their stock price just went to the floor. So it's very interesting that one of the world's richest men, one of the biggest and best known investment groups in the world, Berkshire Hathaway, is coming in, and they're buying major piece of the company, 38% stake in the company, but also they're giving them a loan too. So they're playing both sides of the fence, the debt side and the equity side with Home Capital. I find that interesting. A lot of people are sort of latching onto this and saying, see, Warren Buffett is a big believer in the Canadian housing market. You know, if Warren Buffett invested in this mortgage company, then therefore the housing market must be very strong and so on. I don't see that connection necessarily when you read this interview with Warren Buffett. I think basically, as he's done time and time again in his career, he's looking at this as sort of a classic buy low, sell high type of opportunity. Buy when others are fearful, and sell when others are, euphoric. Kind of is paraphrasing his mantra that's so famous. So he sees an opportunity where public, perception of the company is very, very low, but reality of the company is actually that it's fine. The company is financially sound. Like there's no reason to think that the company is worthless at all. But public perception has driven the value of the stock way, way down, and it's caused all sorts of problems for them. So he's coming in at a time when public perception is down. He's attaching his brand to it. It's obviously, the stock price has sort of just about doubled since his involvement in it a week or so ago. And things are looking very good for Home Capital moving forward. Again, it doesn't necessarily speak to the strength or the weakness of the Canadian housing market as a whole, or certainly of the Toronto real estate market as a whole. But I think it's a good lesson for us as investors just to observe a move like that and to see how one of the most successful investors of all time is swooping in when perception of things are really, really bad. But the reality, as his analysis says, as he says in the article, they look at the company, and the reality is the company is fine. The company's strong. And the company is playing a very valuable role, as he talks about, of basically giving people mortgages in Canada who don't fit the normal who can't fit the exact square, tight little boxes that the Canadian banks require their the main Canadian banks require their borrowers to fit into. If you don't fit into this exact box, I mean, he says himself in the article, he probably wouldn't fit into those boxes. If you looked at his income, if you looked at his mortgage application, he probably would have a hard time getting a mortgage, which is funny to think of, but it's true. There are many people who are very financially strong, who have very great assets and great reasons why they should be, given a mortgage, but they don't fit the neat little boxes of the big banks. And so that's where Home Capital and other lenders like them come in, and they play an important role. Finally, the last article is from the Financial Post, and you probably heard about this. Toronto hotel has to pay millions to Donald Trump's company to drop his brand. So the Trump Hotel, finally, after many years of struggling along and many controversies and lawsuits and so on, that building the Trump name's coming down, and St. Regis brand is taking over. St. Regis, which is sort of the high-end arm, I suppose, of Marriott International. So very interesting. That saga is finally coming to an end. Hopefully that will finally bring some stability to that building there, which has, started selling that building way back in, I believe, 2003, 2004. So we're about 13, 14 years in. And finally, hopefully, this building will get some much needed stability. And if you've been in the building, it's absolutely gorgeous building, gorgeous property. Restaurants and everything, the hotel, everything is fantastic there. It's just, again, the perception thing, right? Just like we talked about with Warren Buffett, perception of Trump is certainly at an all-time low in terms of the brand name there, especially here in Canada. We're not big Trump fans in general. And so, yeah, this is good for St. Regis for coming in. I think the building is, once it has that stability there, I think it's going to do very, very well. The suite layouts are great. The project is fantastic. I mean, the finished product is great. The location obviously is amazing. So it would be very good and interesting to see how that property stabilizes now moving forward. Okay, that's it for today's episode. I hope you enjoyed this one. If you can go ahead and hit the like button or the share button, leave a comment, let me know that you're watching, share this with someone you should know. It'd be much appreciated. And until next time, I hope you have a great week. Bye.